Hello, everyone. Welcome to the market opening bell for Friday, May 23rd. Concerns over US debt intensified, dragging Hong Kong stocks lower on Thursday following global markets. The Hang Seng Index opened 79 points lower, with losses later widening to 356 points, dipping to 23,470, and closed down 283 points, or 1.2%, at 23,544. The A-share index fell 103 points, or 1.2%, to 8,557, while the Hang Seng Tech Index dropped 90 points, or 1.7%, to 5,251. Total market turnover was 198.2 billion Hong Kong dollars. Southbound funds recorded a net inflow of 3.88 billion Hong Kong dollars, compared to 1.427 billion dollars the previous day. Notable net buys included China Construction Bank, 929 million Hong Kong dollars, Meituan, 584 million, Popmart, 396 million, and Bank of China, 241 million. Net sales included Tencent Holdings, 866 million, Xpeng, 677 million, Alibaba, 286 million, Sansheng Pharma, 238 million, and Xiaomi, 108 million. Data shows southbound funds have sold Tencent for 13 consecutive days, totaling 16.099 billion Hong Kong dollars. Xiaomi for 5 days, totaling 1.84 billion dollars, while buying China Construction Bank for 8 days, totaling 6.437 billion dollars, and Meituan for 5 days, totaling 3.024 billion dollars. Technical analysis, the Hang Seng Index is expected to fluctuate between 23,400 and 23,900 in the short term. If 23,400 is breached, the next support level is 23,050. A-share indexes traded narrowly in the morning but weakened in the afternoon. The Shanghai Composite Index fell 7 points, or 0.2%, to 3,380, while the Shenzhen component dropped 74 points, or 0.7%, to 10,219. Combined turnover in Shanghai and Shenzhen was 1.1027 trillion yuan. The renminbi US dollar central parity rate was set at 7.1903, up 34 points. Xiaomi shares slid 2.3% to 53.2 Hong Kong dollars. At its 15th anniversary product launch on Thursday evening, Xiaomi unveiled new products including the Xiaomi 15S Pro starting at 5,499 yuan and Xiaomi Tablet 7 Ultra starting at 5,699 yuan, both powered by the 3nm Xuanjie 01 flagship processor. The Xiaomi Watch S4 15th Anniversary Edition, priced from 1,299 yuan, features the Xuanjie T1 long battery 4G chip. The spotlight was on the Xiaomi YU7, a luxury high-performance SUV, and the group's second model after the SU7 electric sedan, boasting 690 PS and 508 kilowatt peak power and a top speed of 253 km per hour. Available in 3 versions: single motor rear drive YU7, dual motor 4-wheel drive YU7 Pro, and high performance YU7 Max. The standard version offers an 835 km range, leading mid-size pure electric SUVs. Xiaomi did not disclose YU7 pricing or open pre-orders, with Chairman Lei Jun stating it will launch in July. Compared to Tesla's Model Y priced at 263,500 yuan, the YU7 is expected to cost at least 60,000 to 70,000 yuan more, with pricing to be announced in July. Lei jokingly said a 199,000 yuan price is impossible. Regarding other auto stocks, BYD recorded 7,231 BEV sales in Europe in April, surpassing Tesla's 7,165, marking its first time overtaking Tesla. Domestic media reported that Li Auto lowered its 2025 sales target from 700,000 to 640,000 vehicles, with 520,000 for the L series extended range models and 120,000 for pure electric models, including Mega. The company will also implement moderate cost controls. Lenovo Group announced its 2024-25 fiscal year results ending March 31st, 2025. Annual revenue rose 21.5% to $69 billion, the second highest on record, with profit up 8% to $1.384 billion. In Q4, all core businesses saw double-digit revenue growth, driving a 23% overall revenue increase. However, shareholder profit fell 63.7% year-on-year to $19 million, mainly due to non-cash warrant fair value losses. Despite strong revenue growth, profit lagged, leading to a 5.4% share price drop to 9.57 Hong Kong dollars. Earnings today include Tongcheng Truffle and Miniso. There are two new listings today, Henry Medicine and Mercedes. Henry Medicine closed at 58.85 Hong Kong dollars in Phillips stock pool grey market, up 33.6% or 14.8 Hong Kong dollars from its IPO price, with a 4% discount to its A-share closing price. Excluding fees, a 200-share lot gained 2,960 Hong Kong dollars. Mercedes closed at 31.2 Hong Kong dollars, up 33.9% or 7.9 Hong Kong dollars, with a 100-share lot gaining 790 Hong Kong dollars. Trump's tax cut bill passed the U.S. House by one vote, raising concerns about worsening U.S. deficits. Though U.S. Treasury yields eased, U.S. stocks were mixed. The Dow, after falling 146 points, briefly rose to 129 points, but closed down 1 point at 41,859. The Nasdaq gained 53 points or 0.3% to 18,925, while the S&P 500 fell 2 points to 5,842. The Nasdaq Golden Dragon China Index dropped 1.2%, with Alibaba down 1.7%. Tesla's European sales were overtaken by BYD, but its stock rose 1.9% to $340.94. Google's new AI search product received positive feedback, lifting Alphabet by 1.4% after peaking near 5%. Nvidia rose 0.8%, Amazon gained nearly 1%, and Apple fell 0.4%. S&P Global US PMI Composite Output Index rose from 50.6 in April to 52.1 in May, signaling faster activity growth from a 19-month low in April, though still among the lowest since early 2024. Services PMI rose from 50.8 to 52.3, and manufacturing PMI climbed from 50.2 to 52.3, marking the strongest manufacturing improvement since June 2022. U.S. initial jobless claims for the week ending May 17 fell by 2,000 to 227,000, a 4-week low, beating market expectations of a rise to 230,000. Our stock pick today is BIOCYTOGEN Pharmaceuticals, stock code 2315. BIOCYTOGEN Pharmaceutical is a global biotechnology company that leverages innovative technology to drive the development of novel antibody drugs. Its drug development business includes antibody discovery and the selection of a small number of promising drug targets in oncology and autoimmune diseases. It screens for potential PCC molecules and independently advances them to the preclinical stage. During the R&D process, BIOCYTOGEN Pharmaceuticals can fully or partially collaborate on, license, or transfer product rights to external partners. securing upfront payments, milestone payments, and sales royalties. This approach enables sustained revenue growth in both the short and long term. In 2024, the group's antibody discovery business gained further recognition from international clients, with 7 of the world's top 10 pharmaceutical companies becoming clients. The number of antibody molecules transferred externally increased rapidly, driving fast revenue growth. Building on positive cash flow from operating activities in the first half of the year, the group achieved a full-year net profit, turning losses into gains. For the year ending December 31st, 2024, the group recorded revenue of 980 million yuan, a 36.8% increase year-on-year. Of this, the antibody discovery business generated 317 million yuan, up 80.7% year-on-year, accounting for 32.4% of total revenue. Supported by a preliminary global network, particularly its advanced laboratory and high-standard animal facilities in Boston, USA, the model animal and antibody discovery businesses maintained rapid growth, with an increasing proportion of revenue from overseas. The group's net profit for 2024 was 33.5 million yuan, achieving a turnaround from losses to profitability. Net cash inflow from operating activities was 211 million yuan, driven by effective strategic adjustments. The phase of large-scale R&D investment has ended, with R&D expenses dropping 31.7% to 323 million yuan. Additionally, operational efficiency improved significantly, with general and administrative expenses falling 23.7% to 218 million yuan. The group's product pipeline includes candidate drugs targeting novel targets or those with differentiated efficacy or safety, validated through preclinical and early clinical studies. As of December 31st, 2024, 6 candidate drugs had licensing or transfer agreements with various partners. 5 of the 6 clinical stage candidates and 1 of the 4 preclinical candidates had reached licensing or transfer agreements. By the same date, the group had signed approximately 200 drug co-development, licensing, or transfer agreements, with about 100 new agreements added in 2024, a 70% increase from 2023. Recommended buy price 14 Hong Kong dollars, target price $15.3, stop loss $13.2. I do not hold the above stock.